Hey everybody, welcome back to Mortgage Ballers. My name is Rich Hanlin, and today I'm with Mike Wilcox. Mike, where are you out of?
I'm in Denver, Colorado.
All right, you got a little snow on the ground, or are you guys having
We
a
did two
off
days
day?
ago, and today's going to be 70, so it's already gone, man. It's
Well,
Colorado in the spring. It's awesome.
it's going to be 60 in northern Georgia, so you're beating me today.
Yeah.
Actually, 70 in Colorado is actually a pretty nice day, actually.
Oh, yeah,
Um,
it's awesome. So,
Especially what, you guys like a mile high right there? So,
yeah, I'm south of Denver, so we're a little higher than Denver on that stuff, so we get a little bit more snow, a little more weather. But yeah, it's gorgeous, man.
well, here's a true story. We did an event in South Denver and didn't quite understand the word South Denver, and I set it up at a place called Chart House. But I stayed in downtown Denver.
Oh,
I
yeah.
get all the way there, and I'm like asking the guy, "Hey, I gotta go, I gotta meet people here," and he goes, "Oh yeah, you gotta head back like towards Colorado Springs. That's South Denver." I'm like, "Wait a minute! I literally just drove by there. I could have pulled over,
Yeah.
and it was like 14 miles, but it was like an hour and 20 minutes because it was that time of day." And I thought,
Yeah.
"Oh no!"
Yeah. If traffic's bad, it takes that. If there's no traffic, it'll take you 10 minutes. So,
Yeah, it took me 10 minutes to get into town as I passed it, and it took me
right.
like an hour 20 to get back. Turned out to be a really good event, though. We had a lot of people. Last time we were there, we were Boulder.
Yep.
Never been to Boulder, so that was kind of cool. Got there right before football season,
Boulder's a different
before it gets
place.
cold. Yeah.
Yeah. Yeah, I went to school up in Boulder, so I used to live there for a while. So it's a
Oh,
different place.
nice. I like it. It's beautiful. The mountains and stuff. I was like, wow, this is really, really beautiful. Breathtaking. Right. Mike, how long you been in lending?
Boy, I started when I graduated CU in Boulder in '94, and I started at Wells Fargo in '95. Hence the
Okay.
Wells Fargo haircut. This is
All
what
right.
Wells will do to you if you've worked there for a long time, right? Or if you're in mortgage for a long time.
I was going to say, you
Um,
look like a banker. That's weird.
Yeah. So I was at Wells. I started in '95, not pure direct into mortgage, but it was credit and lending and all that kind of stuff, personal loans, car loans, mortgage loans, everything. And I
Yeah.
did that for 4 or 5 years before I specialized just in mortgage loans. So I've been
Okay.
doing it for a little bit.
How long you been in the broker side?
I just came to the broker side, what, year and a half ago?
Oh,
I've been in
wow.
retail
Okay.
my entire career until about a year and a half ago when I switched over. So yeah, so
Well,
it's
I mean, this is a good segue question for you.
yeah,
You made that transition right in the middle of a tough market,
yeah,
but you've also been doing this a long time. Difference in people don't understand is you're not getting a salary or an hourly wage. You're actually an independent contractor in the state of Colorado, meaning you generate your own business. You also get to keep the majority of your business because you're generating it. Let's be honest. How's that working?
good. Whenever you make a move, there's always your transition period's always double what you think it's going to be, no matter what, right? Always happens that way. And so I've had to rebuild a bunch of my business, and it's finally starting to take off. But for the last so many years, when I was on the retail side, I was just getting so frustrated because I was losing deal after deal to other brokers. They were undercutting me, or we had to set up comp where I had to book it in my assistant's name where we would cut her comp so I can compete with those things. And man, and so half of my production was not even my name for the last 3-4 years. And it's just, and therefore, and I wasn't I was making pennies on the dollar on that stuff, and I just kind of had enough of it. And so, man, now I'm over here. Once you get over the hump and you learn all your basics and how to kind of navigate the systems and how do I, it's so overwhelming with I can place loans with 140 places or all this different stuff. How do you compartmentalize that and narrow that stuff down to where now I can really be efficient with it, which takes time. Man, now it's awesome because now you can be efficient, you can move, you can go quick, you can be aggressive. I can outprice people all day long if I want to. You make more even outpricing people. So it's awesome, man. I love it.
I had a friend of mine. She works for a company called Countrywide, or not Countrywide, Cross Country.
Cross country,
And
yep.
she's one of the top female loan originators, if not one of the top originators in the whole United States. She does very well. She helps people with compromised credit. She knows how to fix credit and get people in the programs. But when she came over here, she's like, I'm literally making 25 basis points on every deal because I'm having to cut just to get people in. Because she's like, I'm not losing those deals, but it was always at her expense
Yeah.
before the company would ever cut their base, right? But then again, the company paid for every single one of her people. She had like a team of 5. They paid for her location.
Yeah.
They wanted that volume. She's profitable to them because she's selling those rates. And I'm like, what is the problem? Let me look at these rates. And I'm looking at these FHA rates. And I was like, you have like 300 basis points built into these rates. People right now are going, what does that mean? There's a base rate that we all get. And each platform, whether it's Wells Fargo, PRMG, Cross Country, Xpert Home Lending, whomever, we can choose what our profit margin is going to be. And based on how much profit you want, a lot of places start, we want to make X amount, and they just push it and say, go sell it on people like Mike, where the broker world typically is much leaner and we don't need to have these huge margins. But yet, if we're being honest, I still think 60 to 65% of the monthly business is done by direct lenders. People do not know better, and they go with whom they trust. If the realtor says, I use XYZ direct lender, they don't know different. They find out eventually later. That's been the hardest point or hardest part of the industry over the years. I eventually got to the point where if I'm not the best for some reason and I know they can get it better, I'll tell them, go get it. I said, you're going to find out anyways. I'd rather tell you and be honest with you. I know you can go to Safe Credit Union and get a better deal on this transaction. Here's why they're running a deal. Go get it. And if they lie to you or something, come on back. But this time around, they're better. And they respect that more than when I just go for the business and close it. People say, no, you got to take it when you got it. That's never worked for me.
Yeah.
It's just not who I am. I have people, I've done 40 deals for them and their family because I take that white glove care of them, which I like. Hey, what's the favorite part of what you do in this industry?
I'm very similar to you with that. I'm all about educating everybody on here's how everything works. Here's how rates work. Here's why rates are priced this way. Because, everyone is quoting rates online or on the radio. They hear all that stuff, and that's for this person that's in this little box right here, but this person's in this box over here. And you have to educate them on why are the numbers the way they are. And then I always work with them with, here's your short-term plans, your long-term plans after you do your interviews with them to really understand what are their true goals with doing these things. And so, man, I love educating folks on here's why these things work and to give them a path, especially when all they've ever heard is, no, I can't do this. It doesn't make sense for me. I'm turned down, whatever the case is. Because for me, it's not a matter of if, it's a matter of when. And so I will always put them on a path. They might not be able to buy for a year or two because I do have to do credit repair or whatever the case is, but that's fine. But we have a path now. And then when you follow up with them to check up with them on the path, that no one ever does. Most people, they're in it for, I need the loan right now. And if I can't do it, it's in a trash can and they move on. Man, and when I start talking to folks, because you know what? I've been doing this a long time, and I need a loan next June. I need a loan next June 2026, right? And so if I start working on that now, oh my gosh, and that stuff, when you do it long enough, starts to snowball, and your pipeline gets smoother, and it's easier, it's less stressful, and then it's just a matter of following up with folks. So I love educating people on why things work and creating plans for them when no one else would do it.
I like it. That's a great way to do it, because you're right. That consistency, day in and day out, eventually those deals that you spoke to a year ago that you've been working on, it's their turn now. They've done the steps, and not everybody walks in and is ready to, I'm ready to buy today. That's, unfortunately, we get a lot of that. I saw a house this weekend, Mike, and I want to buy it. Qualify me. And you're like, I wish I would have had you 3 months ago because there's some stuff we need to clean up on your credit because 100%. Did you realize this? Do you realize that co-signed a car for your kid?
Right.
They hadn't made their payments. You been getting any notifications on that? No, what are you talking about?
Well, and that's always the response. I'm only co-signed on that one, so that doesn't count. It's like,
yes. I don't understand what the problem is. It's like, Even my sister, she has co-signed student loans, and I'm like, unfortunately, that's still on your debt ratio, and your daughters have some huge amounts, right. And it is affecting you when you go to qualify for stuff, unfortunately, because they're not showing that they're making those payments yet. So it's like, ouch. But she did good with it. You're wearing a shirt right now. I know what it says, but talk to me about it. I know you don't go it alone. I know you kind of have a little team approach action with a couple other people here.
Yeah, there's a couple of us that are part of True Rate.
The troublemakers. That's what
T is for trouble, right? And myself, Tim and Dave, we spearhead it, and we want to speak the truth. We want people, we want them to understand, here's how things work, because the more they understand, the better decisions they can make. And so, like, how many mortgage people are out there, like, when the customer says, oh, I'm shopping around, they're all like, no, and we take it from the opposite approach. We're like, that's so smart. Shop everything. Shop us, please. Because we know with the system you guys have, I know I can beat everybody in price. And once you get them past price, it's so much more valuable, because then they know, okay, I'm going to get a good price, but more importantly, I'm going to get knowledge and some education and a plan of attack on these things. So it's a bigger long-term thing versus I got a better deal by 10 cents. And, money's money. And that's what everyone who preaches, like, oh, I got this for my credit charge is cheaper or whatever. I was talking to someone the other day, and they're pre-approving somebody on a $3 million jumbo deal. And the guy's walking over, this company charges $295 for a credit pull, which is crazy high, but it's a $3 million deal. So in reality, who cares if everything else matches up? But people are so focused on every little penny versus the bigger picture. And so if we can get them to see the bigger picture, but still knowing we can maximize all their pennies, especially in our model, man, we just got to get them to see that stuff. You got to get people to move from percent sign to dollar sign, because you don't go to the grocery store and say, hey, you owe me 8.5%. You owe me $58. So we got to get them down to that dollar figure so it's real to them. Makes a lot more sense if you can get them to move to that side of the fence.
I got into it a lot of years ago, especially with my first-time home buyers, because I know they're going to shop me. So I'm like, here, let me shop it for you, in the sense that let me give you my lowest rate with the highest cost. Let me give you something right in the middle. And let me show you how I can get rid of all your cost.
Yeah.
And you just come up with down payment. And today what that looks like is this, and you can see the difference in the payments, because if you shop me, they're going to ask you, if I only give you one of these, they're going to offer you one or the other items to look different, when in essence, we're all very similar. But I'd rather give it to you up front, because I'm showing you have choices in this. So many first-time home buyers, quite honestly, Mike, it seems like all buyers nowadays, they use their home and they're like, hey, I need to hold on to some of that equity because I'm going to pay down some of my debt that I've incurred, and then the rest can go towards the down payment. And, gone are the days. Back in the day, so you're right there with me, I would say. You're a little bit younger than me, but
not much.
Back in the day, it was if you sold a house, you had to take all the equity and put it right towards the next one.
Yeah.
Or you would incur taxes. Now we have that, little break in action for married and or non-married people, $250, non-married $500 if you've been living there the last 5 years. And it's funny how many people I run into still think it's the old way, and I'm like, that hasn't been around for a while. But, we used to force people to keep moving that equity so people could really pay off their house. Because they didn't want to pay taxes on that. But now with that, people, it's get rich quick scheme. It's, build up debt. Most people are just month to month, no matter where they live. Very few people have a lot of extra after the taxes and they get to the net income. Just crazy to me. But I want to say this about your team. Dave Bleesmer is one of the top 25 for Xpert Home Lending. Tim Ray was like top 35 for Xpert Home Lending, top 25 last year. So he was really upset. But what Tim's not telling everybody is, in the course of a year, we probably brought on another 40, 50 people that are considered top originators. And so you have the best of the best all in one bucket competing against each other.
Yeah.
And so we had some top 25 that they got pushed out, right? Because we had new blood coming in. And that's true of any platform. But Tim, what did he do? He said, not this year, Rich. And he disappeared. I couldn't catch. He's like, I'm in a zone, and boom, he turned it right back on because he knows how to turn it on.
Yeah.
And so many people, it's that daily consistency, like what you're talking about, and it starts to back build on itself till eventually, you don't leave holes. Oh, I have all this business. I'm not going to do any prospecting, and then I'll get back to it. It's like, no, when you're busy, you're prospecting. When you're not busy, you're prospecting as part of your day equals consistency. Stephanie Gilbert, Catherine Barnett just shared that with us. They're like, it's just all in the day of our work, and it's accountability to staying consistent. Crazy.
Yeah, I was going to say the same thing every day. If you're not making your base calls, and it's gonna cost you down the road, no matter Whether you're having a great month, a bad month, doesn't matter. But as long as you're doing your basic calls, you'll stay relatively consistent. Or if you do go into Lola, which we all do, it'll pick back up real quick. You'll have like a bad week or two. All of a sudden that following week, it's like, oh, I just got 12 apps because I've been making all my calls. And so, yeah,
it back builds. It really does.
It's critical to work your data, for sure.
I trust the process that works for me. Each person's a little different, but I know that if I just follow the same procedures, yeah, I've had times where I'm like, oh my gosh, I'm on a 4-week run here. And then sure enough, that 5th week, wow, I just got 3 apps. And it's interesting. And then I've been on the other end. I've had 50 active loans in my pipeline, and I'm begging for help.
Yeah.
Because I was telling someone the story the other day. I had people lined up outside my office off an ad I had written. And I'm like, hey, I leave your number. I'll call you back. I was a 1-person office, and they were lined up off an ad. And no, we'll wait. And I'm like, I'm just going to start locking all of, that's what they're concerned. I want to lock in on that rate. And I locked all the rates. Then I sent out the good faith estimates. And then it was the craziest thing I ever did in my life. That was the best month I ever had in my life. Off of a $425 ad. Awesome. That went out, and there was a little thing they threw on people's driveways once a quarter. And I just put a fluorescent colored piece of paper in there, and I put a very specific loan in there that one of the lenders was offering. And thank God it got out right away, because I tried it a second time, but it took 2 weeks to get the publication out. By the time it hit,
rates changed.
The rates weren't there no more. So it worked one time. It failed miserably the second time.
Yeah.
That was crazy. All right, I want to know this. Because you answered a couple of these questions I like to ask, but everybody sees Mike as a loan originator. It sounds like you've been doing it a long time, so even your friends and family probably know you as a trusted resource. But if we throw the business side out of it, I get that you do loans. I get that you have to, be answering questions, but I want to know more. Who's Mike Wilcox when he's not doing loans? What kind of life do you have?
Before I go there, that's like you touched on this, and like doing this for a long time, man, this is a critical thing for newer people in there. So many of these folks, their friends and family don't know they do it.
I run that all the time.
And I hear that all the time. They're like, oh, my, one of my good friends just did a loan and they didn't call me. I'm like, do they know what you do? That happens all the time. So make sure your direct sphere knows what you're doing.
Well, and here's one thing to that, Mike. I've even gone as far as somebody didn't use me. I've asked them, hey, you know that I do this. I just wonder, and I'm not mad at all, because I just want you to be happy. If you're happy, that's cool. But I also want to make sure I didn't scare you away. Was there anything that I did? And it's like, I've had people say, Rich, it was my brother-in-law. And I said, fair enough. If you're happy with it, your brother-in-law, I know him too. I'm glad I didn't know he was in the business. It's like, there's enough business to go around. I'm here if you ever need me. But I want to know if someone's not using me, like, well, I think you're a jerk, Rich. I didn't, it's like, oh, okay. Right. I didn't realize I was giving out that vibe. Sorry. I didn't mean to cut you off though, Mike.
No, it's all good. But it's like, and some people don't want to mix business, all that kind of stuff with family. I get all that, but make sure they know what you're doing, because a lot of people miss business that they don't even have a clue. So, me outside of mortgage, let's see, been married for a long time, been married 28 years. My son's in college. My daughter's a junior in high school.
Wait, son goes see you?
No, he goes to School of Mines. He's way smarter than I am.
Okay.
Yeah. School of Mines is one of the top engineering schools in the country. So he's going there, and I talked to him about, here's what's going on in his class or some of his homework. I don't even know if he's speaking English. I'm like, dude, I know numbers. So
my son Jordan was that way.
Yeah. So, and my daughter, she's starting to figure out where she wants to go. She's a junior in high school. She just turned 17 2 days ago. So it's like, it goes fast. It's crazy.
It does.
Yeah.
What about hobbies?
If I'm not
you're in the most active state in America.
Yeah. If I'm not solving someone's real estate problem, man, I mountain bike a ton. My church is standing in the middle of a river. I fly fish. I live to fly. That's my church, man. Standing in the river.
Interesting.
It's beautiful. You come out here, we'll take you next time, man. It is
I fly fish as well.
So people ask me, and a couple of my friends that I fish with all the time, hey, can you teach me how to do it? And, I've been fly fishing for a long time, and I still think I suck at it, and I do okay, but it's a really hard skill set to learn. And so what I tell everyone the same thing. Your worst day fly fishing is standing in the river in the mountains sipping on whiskey. If you're cool with that as your worst day, it's a pretty good day. Oh, I used to ski a ton. I grew up in Colorado and skied an absolute ton. But last older, knees hurt. It's harder to do.
I knew you were going
This is
there.
a goofy thing with what I do for a living is obviously we make money on people moving here, all that kind of stuff. Oh my gosh, so many people moved here over the last decade or two. And
Colorado's
traffic
been on fire.
Oh, it's terrible. And so, man, I don't ski much anymore. So I'm more into fishing and mountain biking. Used to golf a bunch, but then I had to kind of pick between golf and fishing, and the fish win, man. So
One of the best things I ever did to learn, the fly fishing cast and the wrist and all that. I went to an event. It might have been like Cabela's or something like that, but they had this. Oh, it was like a outdoor type event in a big old fairgrounds, and they had salmon fly poles, which are much heavier weighted.
yeah.
But you've got to be able to cast, I mean, literally 120 feet. But this weighted line, like you could really feel the load when you came back.
Oh, yeah.
And you could drive it. But man,
Yep.
yeah, it taught me what I was trying to do in the bringing it back and forth. Because mine is very, very light. I mean, it's made for 15, 20 feet. I could maybe get a little further out there because otherwise you're going to be too far across. You're trying to get it right where you need it. But it carried over. The hardest part, and you're not going to say it, I'm half blind and trying to tie knots sometimes, especially fly fishing knots, connecting two straight lines is not the easiest thing to do. I typically try and do it beforehand.
Yeah. No, you're spot on. Like I'm obviously a lot older now too. And if I'm fishing out, especially if it's cold and your fingers are a little numb,
Yes.
and you're trying to tie on this little fly and you're like, I can't see it. That happens a lot. So so now I got my, I've got fly tying glasses so I can actually see it.
They have something for everything. Cause I literally was trying to tie a knot the other day and I could not see the stupid hole on the knot. And my son's showing me this thing like where it's almost like a hook. You just kind of put the hook in, wrap it around, then pull the hook out. And I thought,
yeah,
that's bad. I haven't even got to my grandkids fishing yet. I'm not going to be able, I mean, I'm going to have to really get pre-tied hooks. I'm going to have to go the other way.
Yeah.
But I'll tell you what, I love fishing. I've actually fished in a lot of different places. I've fished outside the United States. I like fishing for big fish. So
Yeah.
I love the salmon runs up in Puget Sound.
awesome.
Love the fishing off the shore of Key West. We went like 45 miles out in the middle of nowhere, and you hunt the fish. They know what they're looking for. The only thing I've never done that I honestly think that would be pretty cool is spear fishing. Where you actually get out there in the water in the current and get with the bigger fish. But I got to admit, I told my friend Brian, I said, if I'm going to do that, I need someone I trust at the same time in the waters. So at least we can both take on anything big that comes our way. But you got to have somebody with your back. But when I get in the water, I love the ocean water. It's different every time I go there. And if I could go back and do anything in life, I would have. I would have went after treasure, sunken treasure.
Yeah, awesome.
Go diving in there. I love it.
I started saltwater fly fishing a few years ago too. So it's so different than being in a stream or river in the mountains. It's awesome. And I haven't spearfished either. I bow hunt a lot too.
Oh,
so
okay.
I'm all Colorado, everything. And so I've been out bow fishing. I've done all kinds of stuff. So yeah.
Have you done ice fishing in Colorado?
That's one thing I do not want to do. There's
my brother-in-law lives in Peyton, and he goes
to go
ice
do that.
fishing.
But, yeah.
He's got the big drill and drills down. He's got the big heated tent. And I'm like, but I've been amazed at the size of the fish that he has pulled out of this stupid little hole.
Yeah, it's crazy. I when I'm out fishing, I like seeing everything and moving. I can't just sit there in a block of ice. Now, if I can get a generator and I can get like a football game on, down my little fridge and my grill, all right, I could probably go ice fishing. But that's probably not going
to. How do you put heat on top of the ice?
That's what I would worry about.
Worry about cracking or something?
I know.
It's interesting. Some people in Michigan do it too that I know. I'm like, okay. Every market's different. I know you're Colorado. Colorado is a very interesting place depending on where you live, things like that. Boulder to Colorado Springs, getting up in the outside areas. Talk to me about, we all have the same economy. We're all having the same interest rates. People don't realize, the rates are the same in California as they are in Colorado as they are in Wyoming. It's the same rates.
Yeah.
But what I find is to get into home ownership, Now that varies depending on where you're at.
Yeah.
What does it take where you're at in Denver or South Denver to become a homeowner?
Yeah, I do a lot of first time home buyer stuff, man, and it is so different from back when I started, when I bought my first home. And I feel for these kids, man, because
Yeah.
first
What's
time
the
home
age of
buyer.
the average home buyer, first time home buyer that you're
Say that
seeing?
again.
What's the age of the average first home
It's
buyer?
getting older and older and older because
That's
all
what
of
we're
a sudden,
seeing.
if their first home is worth $600,000, whereas when
Wow.
I bought my first home, it was 110. I mean, that payment is massively different. I'm like, you just got into college and just to buy an okay home, you're dropping 500-600 grand. Oh, that's a big pill to swallow, man. And so that's one of the biggest hurdles for these kids is, man, how do I afford that? And when I'm talking to these folks and teaching them, here's how things work, I'm not as concerned with what they qualify for. I'm a comfort zone dude. And so I want to be, what are you comfortable with? So what payment, your car breaks down tomorrow, your payment's due, and what payment other than zero are you not freaking out over when you got to make that? And I
Other
want
than
to show
zero.
them, okay, based on that number, and the same thing with down payment, here's what that math looks like to kind of make sure, do they understand the numbers? And once we kind of get past that, it really helps them and their agent shop in the right area and the right price points. And so, man, it's really critical to get to understand their numbers, especially their comfort zone numbers. And you can show them, here's what you max qualify for, but man, let's stick on comfort because life happens to everybody. And when it happens to you, you can't miss that payment because you can really screw yourself up. So it's educating them on all that type of stuff. And so, but it's difficult, when, hey, I'm 25, first job, and my mortgage payment is going to be $4,000. Oh, dude, that's a knife in the heart for so many people, most people. And so you gotta build your strategies and your plans around how you do that. So you're seeing a lot more folks where their parents are gifting down payments or things like that. Like my son's 19 and we're already kind of working on his plans on how are we going to buy his first home when he's out of school. So we're already working on that stuff now to help him get prepared and start figuring those things. Unfortunately, most people just don't have a plan because they're just like, we'll figure it out.
Yeah. My older son
That's the
used
plan,
his
and so
yeah, my older son used his VA eligibility, worked out incredible for him. My younger
yeah, that's
son,
awesome.
he got to a point, he said, hey, a bunch of my friends want to go rent. And we found all these places. I'm like, okay, wait a minute. Whoa, 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 whoa. Is this the area you guys like? If you would be willing to go one city over, I'll go in and I'll buy that first rental property, but I'm going to add you on it because I want you to start getting credit on the loan. And I'll split the equity with you, but then rent some of the rooms out.
Yeah.
And you'll accomplish the same thing. But sure enough, what do those kids do every dang time? Hey, is that a dog in the backyard? Oh yeah, so and so brought home a puppy. Oh yeah, I thought we weren't going to have animals.
Yeah.
Do we have a cat inside the house? Like, what's going on? All of a sudden, it's, we got multiple animals, and I'm thinking, like, why does everybody always got to jump out there and get an animal? It's like, I love animals, don't get me wrong, but it helps if you own the house before you start bringing animals into it, especially when you're not supposed to have them, and it's your own son that's doing it, and it's kind of hard to push on the other people when Justin's doing it.
Yeah.
Love his dog, love his cats, but that worked out really good because I got him into the homeowner's situation because I stayed away from him, and he had to pay the utilities, he had to pay the payment on the house and all that stuff, and he did that for 2 years and did phenomenal with it. His older brother, I'm thinking, gosh, Jordan, you're 29, you're on your fourth house because he was in the Air Force. He came out of Colorado Springs, so that's
awesome.
why I was in Colorado Springs a lot because my son went to the academy right there. Justin went to Arkansas.
Yeah.
And they both said, we ain't coming back to California, so we better figure this out. So where am I now? I'm in northeastern Georgia.
Yeah. There you go, man.
Crazy. All right, now I want to touch back on this because I think it's so important. So many people do this alone. They're just lone wolves, which is fine. They wake up, they don't talk to anybody, they don't interact with anybody, and that works for some people. But then I have people that are on teams, and sometimes a team is just knowing that you're going to meet once a week with some other people that you could bounce ideas off of, like because you're both doing, or all three, or all four, or all five doing the same thing, but you can lift each other up. How does it work with your group? There's what, 3 of you there?
Well,
with True Rate, or
there's 3 of us. We have a few more on there. Like I have my own assistant too. Dave has his assistant. So like my assistant Nicole, her and I've been together for 19 years now.
Wow.
It's crazy. And so, she clearly knows how I think. I know how she thinks. And so she handles part of it. I'm like you. I want to be out in front talking to people and teaching people how things work. But once we get down to, we got the deal sold, they're under contract, they're on the right plan, they understand everything. Then it gets into the details of getting the deal approved. That's her part of it. So I let her roll with it. But like my role with Dave and Tim, we're like Dave and I live fairly close, and we sit in the same office together. So him and I are hanging all the time. And so we are always, hey, I ran into this. What's your thought on getting out of this situation? Or how to get around this? What lender do you know? Or, how do we go about this? And so we're always bouncing ideas off each other with how do you fix that stuff? Because as you said earlier, there's enough business to go on everywhere. It doesn't matter if we sit in the same office and work the same area. We never cross paths ever. It's really weird. And so, the more we can share ideas, especially in this model when, hey, I got this particular situation. Back in the retail model was, well, that's just a turn down. Over here, it's like, oh no, you got to call this person at this shop and they might be able to find a way to get you through that stuff. Man, and that's crazy. But, you can't possibly know every product and every lender and all the guidelines for all over the place out there. So it's really good to have a team to say, hey, here's my situation. Who's run into it? What's your thoughts? To kind of start bouncing things back and forth. Super important.
People don't understand. A mortgage broker, if they're doing it right, some people think the idea of a mortgage broker is that they're supposed to find the lowest rate at all times. And I'm like,
Yeah.
where did you get that at? My job is to get the job done.
Yep.
And to navigate and know I got 126 lenders, but sometimes some of those lenders are having a bad month and I don't want to take a client there. Sometimes their rates are high that month. So guess what? I'm not going to take the loan there. I'm going to figure out on your situation with the challenges because every loan has some type of challenge.
Especially
and once I
today.
figure out what that challenge is, then I'm going to navigate, okay, these 5 lenders might be lower in rate, but they don't like that particular challenge.
Yes.
I'm going to use this challenge. You were self-employed and you literally just became a W-2. Literally just became a W-2. How funny is it? Right before you went into contract.
Yeah,
Well,
right.
some of my lenders don't like that. Some of
Yeah.
them are okay with it. And it's knowing those differences, but also picking up the phone and contacting AEs. Though, can we do a 500 score? Sure. I got some lenders will do it, but I'm going to call that AE. I'm not just going to say, you're approved. Like, look, on the list, it says you at 500, you can do it. It's like, let me call because they beat those files a lot more harder than they do an 800 score, right? They're going to look for, there's a reason you're a 500. Let's figure out the reasons. Well, oh, you never pay your bills. But now all of a sudden you're going to pay this biggest bill for $4,000 a month now that you're going to buy in Colorado.
Right.
Have you even been paying your $2,000 rent? There's so many variations. Those are obstacles. They can be overcome. And sometimes it's the experience of a loan originator that can say, you know what? Collectively, has anybody run into this? Yes, we have. And then you get somebody else who kicks in and says, hey, I call Nicole at Kind or call Hayden over at UWM. I did one of those 2 months ago.
Yeah.
You're not alone. Believe it or not, it's hard to stump the world when you have 600 plus originators doing hundreds and hundreds of loans per month. They've seen almost all of it. And I mean, look at you. You're what, 28 years in it? We got people with so much experience. And it's like, really? You think no one's seen that before?
Yeah. 100%, man. And it's awesome to have folks that you can bounce things across. And like, I started on the subprime side and then I was like, how do I differentiate myself? And I went into renovation in 2005.
Yeah. I like
so I was a
renovation.
203K guy and I was doing more than anybody. But once you learn how to do the difficult products, man, it helps you to think outside the box. And so probably half of the deals I book are from other lenders not being able to do them. People just, they know of me or whatever and track me down. And so lately I'm on this non-warrantable condo thing where all of a sudden everyone's like, hey,
well, I'm amazed how many there are.
We
There's
hear
a
you
lot
can
of them.
lend in here and because no one else can figure it out. And, and it's a matter of just having folks around you that can help point you in the right direction and you can bounce things off of so you can do that. And you can pick up a lot of business because most lenders, most mortgage folks, mortgage banker, mortgage brokers, whatever, once things get a little hard or outside their comfort zone, they're moving on to new deals versus there has to be a way.
There's overlays. They don't want to.
Yeah, it's a lot of work and they just don't want to do it. And so, which is good for me, but yeah.
No, what I find, and for the record, a 203K is a type of FHA loan that gives you the ability to take an aftermarket value. You get all the improvements you're going to do, and based on the upfront value plus those improvements, they'll give you an aftermarket value. And if you follow the script, don't start changing out what you said you're going to do. They'll
Yeah.
have some people kind of watch over it, and you can actually put improvements into a house, including energy efficient things, to bring an older home more efficient. And what's the other side? You used
You
that
could
loan.
do
Oh, we threw
anything
out
from
203K, and we threw out, what was the other loan that you said?
home style, Fannie Mae home style is the Fannie Mae version of it.
Yeah, yeah.
So
I mean, sometimes people are like, well, what's that? And it's like, no, it's a real loan, and you can take an older home. Think of Chip and Joanna Gaines.
yeah.
They take an older home, and you're like, how do they do that? It's a 203K loan, I guarantee
The
you.
way you can do it yourself, man, it's awesome. And like back in the day, we used to get around when, hey, we had an appraisal coming low, which happened all the time in like right after, between '08 and 12. And we
Hmm.
had with the blow up, we had appraisals coming low all the time. Cool thing with the 203K is you can go to 110% of future value. And so we would be like, all right, put new appliances in there. Let's go 110. You now appraisal works. You just saved the deal. Or at least you at least gave them a path to save the deal
Yeah,
if they went down
that's an
that road.
incredible value add right there.
You
That's an
know?
incredible value add. I forget some of those little tricks. I hope
Yeah.
people understand what you just said. If you don't know what he just said, call Mike and let him blow your mind with what he just said on a low appraisal, how he made an FHA low appraisal work.
Yeah, and so you just got to build that path though, because there's positives and negatives to everything, but at least that gets you over that hurdle where everyone else just turned it down. You have a solution to still get the deal closed if they choose to. So, but you can do from appliances to scrape and rebuild on that program. So it takes property condition out of the equation. So it's an awesome product once people understand it and understand the rules.
No, absolutely. I like it. I like it. All right. Any questions for me, Mike? I'm sitting here drilling you with questions.
No, it's
Not
good,
that I
man.
caught you off guard there, but I always want to give you an option to ask me a question if you got something you want to ask.
Yeah, man, I love what you said earlier about with the setup of Xpert. Now that you're working on being back out amongst the people, man, we want you out here. Like, you just where do you see Xpert going? Are you still trying to get it bigger with LOs, or you just want it better? Like
Um,
you were talking earlier about, we got to train. There's a whole bunch of folks that aren't
that are
producing what they want
struggling.
to. How do
Yeah.
we help those folks to make things better? I know when you bring on newer, younger LOs, that creates a compliance issue, and so obviously you guys want to avoid that like the plague. I know, and so where do you see Xpert going?
Well, and that's a great question. A lot of people want to ask that. Because of the way that we allow people to recruit and people want to build teams, sometimes they will bring people on that aren't people we would normally have brought on at a first level loan originator because we know they need help. We don't teach anybody how to be loan originators at Xpert Home Lending, hence the word expert, but we rely heavily on that person. Like if Mike wants to bring people underneath him and teach them and mentor them, then we want a recruiting addendum that says, what's Mike going to do for these people? Mike, sell me. So that's where we're changing it. It's not about 600 more originators. I think they'll come, Mike. The platform speaks for itself.
Yeah,
But at the same point, what I'm trying to do is say, okay, these people are already here. Can I help them by giving them step-by-step guidance? Do they have a branch manager or a recruiter that brought them on? Can I get with both of them to say, okay, Mike, you brought 12 people on, but man, they're struggling. What's your thoughts with this? And
yeah,
are you okay if I come alongside of you and try and help? I mean, you're already getting recruiting on them, but where do you want to go with this group of people? And what happens all the time is the recruiting loan originator, these are hard times. It's a little tight out there. So when their pipelines start dwindling, they're fighting for every loan, but yet these people are pulling on, I need help, I need help, I need help. Show me, show me, show me. And they're like, there's not enough time today. I got to make sure my wife will kill me if I don't bring home a paycheck. Well, that's what you signed up for. When you brought these people on, said, I'm going to be your mentor, you told them that they could call on you first, not, they shouldn't be calling Rich first or
right.
Nate first or Lisa first. That's not, you have AEs and you have your mentor that brought you on. It should end there. In exchange for whatever the split is for their growth. So we've changed it. We've already changed it, matter of fact, and said, hey, Mike, you want to bring somebody on? I'm going to go to MMI. Hey, Mike, looks like this guy did 2 loans in the last 12 months. What am I missing here? Oh, Rich, he does a lot of loans in somebody else's name. He really does. He did 15 loans last year. Okay, all right. So more than one a month. in this market, I can relate to that because I can compare it to another originator. No, Rich, that's really it. But he's not making a lot of money, and he might do better selling the lower rates. And I'm like, that's not going to work for him, because I'm thinking this person doesn't have a methodology in place. Because guess what? I can sell rates all day long. I don't care how high the rates. Oh, Rich, you're 0.5% out. Nope, I'm good. I can sell rates all day long.
Right.
Because I sell rich right along with it. I know how to manipulate those rates with points and discounts to help that borrower see a different rate if I need to win. And that comes with time. So quality over quantity is what I'm after.
Yeah, that's
At
awesome.
this point in time, 600 people doing an average of 2 loans per deal is $1,200 a month. Right now, we average about 1 funded deal per licensee. In an easy market, when rates are somewhat balanced and refis are part of the equation, I expect a 4-to-1 ratio. But I know that there's coaching that can help people go from poor to good and from good to great. Why? Because I interview some of the best originators, and they all have the same ingredients. Now, what I can't do is force anybody to take those ingredients. So I will offer, but it might be they say, Rich, that's not for me. Not a problem. Well, maybe Xpert's not for you either, to be honest with you. You're not making any money. What is your plan? What are you looking to do? So accountability, a reality check. I'm not throwing anybody out. That's not what I'm getting at. What I'm saying is somebody needs to step in and help people attempt to get to overcoming whatever their obstacles are. Because in the same market, in the same town in Boulder last week, I got a guy going to get a second job. Actually a full-time job. This just became a second job. He's filing bankruptcy. Meanwhile, in that same town is one of my top 5 originator in the whole entire company of 620 in the same town, same license. And I'm thinking, there's an ingredient missing here. It could be work ethic. It could be a lot bigger, but I've got to figure out if you have a ready, willing, hungry person and they just need to be shown. So many brokers say, well, this is what you get, but you're 100% in charge of getting your own business. That's fine. But you're telling me I can't help you out a little bit and say, have you tried this, or this? Yeah. And throw ideas and add some accountability, some coaching, things like that. That's what I'm after. You're already here. You blessed my platform with your presence. How can I help? How can I help you before you just walk out the doors? 2025 is getting me out from behind the desk like we talked about, so I can dive in deeper without having all these people. Best thing I did, Mike, 3 weeks ago, I went to a calendar. All day long, my phone goes off. I just send a calendar link.
Yeah.
And awesome. It's like, if it's not an emergency, you're going to have to get on my calendar, because I got people waiting every hour on the hour, and that's structured. Having people just hit me all day from different directions, that's not fair, and it's not the best thing for me or this company. I need to leverage my time in the direction that brings a better quality life to my originators and also keeps my sanity, quite honestly. We don't need 20 people screwing in the same light bulb. It's just not necessary. The company has grown, and it's time to grow with it and diversify, things like that. And everybody's on board, which I love. And we're already seeing benefits from it because people's strengths are starting to pull in the right direction. All right. We took all the way up that time. I got someone coming right in behind you, my friend.
On board too and saw some.
What's that?
All right, brother. Well, I sure appreciate you, man. Sure appreciate you, buddy.
Mike, I appreciate your time today. I appreciate you sharing. I appreciate that nugget you gave us. Some people might want to reach out to. Matter of fact, we might need to record a 203K and share what you just. People are going to. It's going to go in one ear, out the other. They're going to go, huh?
Yeah.
We're going to circle back on that.
I ran the renovation.
Yes.
Okay. I ran the renovation platform for Academy Mortgage and used to teach CE courses on it. So I'm happy to help.
I love it.
Just let me know.
I love it. There is huge significance in that. I want to thank you for your time. I wish you nothing but success for 2025. That's it, everybody. Mortgage Ballers. I got Mike Wilcox. Mike, thank you again. And like we always say when we close it out, stay thirsty, my friends.
Yep. See you, buddy. Appreciate you. Thanks, guys.